Afternoon, how are we all doing? All good? So I'm in scruffy non-uniform day today. Had one of those days where I've just been running around like a blue-ass fly doing nothing. So, yeah. I haven't got my uniform on. Apologies. Afternoon, Ian, Amy, JC, Harold, Julio, Fletch. How we doing, Marco, Brian? Beautiful pre-market today on the NASDAQ. It's quite a big movement so far this afternoon. But yeah, we'll have a look at all that in a minute. Afternoon XR update.news, Gregors, Virginia, Emac, Harold, George, Dion. Harold, love Huel. Yes, my Huel t-shirt. Can't see it. I live on Huel. I have a liquid lunch, a liquid breakfast, and proper food in the evening. 2 Huels a day keeps the doctor away. And also guarantees an 800 calorie intake throughout the entire day, which is also good for not putting on loads of weight. Afternoon, Antoine. Afternoon, Streamlabs. Good to see you're back. I completely missed the fact that my all my links and everything weren't working on the stream, but they are now. I fixed them this morning. Afternoon, James. So this morning, pretty good DAX. Very nice, clean, easy break today. Easy money. So pre-market range break short. Straight down to target. Job done. Sat around all afternoon, all morning doing nothing and rallied back up. So we've still got the gap in play on the DAX. We have also still got just about got the gap in play from the NASDAQ. Quick whip up today and that'll be done anyway. So we'll see what happens on that. S&P gap still there, just about. Dow's pretty much done it. So it's all kind of played out. The gap fill plays today. So yeah, we'll see where we go at the open. So news this morning, main news obviously has been the euro rate, which is 4.5, exactly as we were expecting it to be. Markets had a bit of a positive reaction to it, but nothing particularly amazing. We've had GDP for the US dollar, which came out as positive. So of course the US dollar's tanked. Unemployment came out as expected. Everything else is just meh. So it's all positive. Press conference, I think, is finished now. No, it's not. It's still going on. So Lagarde is still talking. So that's ongoing. We've got Waller was speaking at 2 o'clock. Didn't even see that. Yeah, there we go. Nothing exciting happened there. And we got home sales this afternoon. So that's it for news today, basically. But Lagarde is still speaking. So just be careful of the euro. We've got Japanese CPI tomorrow morning. So this is going to be quite a big key one tomorrow. There's no intervention move today so far. Day's not finished. But we'll see what happens. So the upshot of the ECB announcement, nothing particularly exciting. All the usual stuff. Inflation is too high. It's been too high for too long. It's being stubborn. We're going to keep rates where they are. We're not going to change them. We're looking for the 2% target. It's going to be taking longer than usual. The same as every other country saying we're not changing our interest rates for the next year unless something dramatic happens. So nothing in here, in all of this lot. There you go. There's a quick summary of everything that you read on the chart on the screen here. All this red crap, Summit APAS, nothing's changed. So one thing that she did say was that they will be maintaining rates for a decent amount of time. And they are still going to change rates dependent on the data for CPI. So there's a load of stuff she's been talking about here, you can see, but none of it is red. None of it's really that impactful or important. So for the euro, as you can, blimey. That's a quick reaction back. So euro US dollar had a lovely big spike, but as you can see, euro's kind of not reacting amazingly great to that news. It's not a huge news event because obviously we would be down at ADRs if it was a massive one, but obviously it is still negative, but not particularly impactful. You can see it's up and down across the board, so nothing I would say is worryingly, oh my god, that's going to fly or dump. Oil today, another big move down on oil. Say big move down. Oh, market's just opened. Blimey. I was late this morning, wasn't I? Okay, market's open. Where are we? Short on the Dow. No trade on the S&P. Range is too tight. Short on the NASDAQ. Okay. Hedged on the Dow, I think. Yeah. So I've got a new account I've just started with Forex, and I'm just making sure it's working. Still short NASDAQ. Okay, that's good. Just wanted to make sure it's taking the right lot sizing. It is. Good. So yeah, we've had fairly decent moves up off of the news, basically, as you can see, but we are still, we haven't gone very far. I'm hedged on the Dow and the NASDAQ. So yeah, not really gone very far at all, basically. So we will see where we end up. But there's lots of earnings out at the moment. There's lots of news out at the moment. So we're going to get a lot of volatility, basically. Just go with the momentum, obviously, as usual. But there's no real massively positive or negative news come out of the US today. Lagarde has just said the rate decision to stay the same was unanimous. Okay. Decision was unanimous. So they all agreed to stay as they were. There's no need to up or down rates at all. Right. So there's your NASDAQ. Sorry, there's your indices open. Quite a big whipsaw this morning. So S&P, I'll be taking the 5-minute opening range. Right. So let's see where we're going on these. NASDAQ. Obviously, downside on the NASDAQ, pretty easy. Just putting my targets up to yesterday's, the pre-market lows, which is within 5R. Upside, I'm just going to leave it where it is, I think, for the minute. This accumulation here. So ADR is there. This is the NASDAQ. That would be where I would be looking for resistance to the upside if we get to ADR, that is. So I'll be looking for a bounce pretty much where we are, 5R upside. So downside, I'll be looking for the pre-market lows to get a bounce down there, which is, again, 5R. But that's well within ADR, so a little bit more risky to the downside. S&P haven't taken. NASDAQ, the Dow. Let's have a look. Yeah, so ADR to the upside, which is these highs, perfect target today. So I'll leave that where it is. And then obviously to the downside, we've got the pre-market low, but we are making new lower lows. So let's have a quick look on the Dow on higher time frame and see what support we got to the downside. Pre-market low basically is where we bounced, isn't it? Apart from that, it's a big drop. So next support is looking like this area down here, which is beyond ADR today. So tricky today. See where it goes. If it doesn't, I mean, if it goes down, then we need to worry about where we're going down. But if it doesn't go down, I'll just look at those highs, basically. Nothing in between to stop us, really. So tricky today. Let's watch the S&P. We've got 17 seconds. See if we get a trade on the S&P. Range is 64 to 130. Yeah, so we're taking an S&P off the 5 minute. Gone in. Margins okay. That's good. I just want to see if the S&P takes a trade because I just want to make sure the I've just put $750 into an account with Robo Forex into a it's what they call a copy FX account basically. So it's kind of like a signal account, but it's only got 1 to 300 leverage. And the leverage, or the margin requirements on the indices are actually quite high. So I just wanted to see if I can take a 2% risk with all 3 indices without getting margin called. Because if I get margin called, it's just going to shut the whole lot out in a loss. So this is a trial by fire test, basically, I'm running over here. So I just want to see what happens when I get triggered on the S&P. So there's your 5 minute opening range on the S&P. So the pre-market was a bit too tight, but big whipsaw on the NASDAQ today, and a pretty big whipsaw on the Dow as well. So not a lot we can do about today from the pre-market perspective, but we're not going anywhere in the minute. Afternoon, Mac. Huel, never heard of it. Sell it to me. Huel is a replacement for food. Basically, it's powdered food, like babies have. But it's a shake. It's a milkshake, but you don't have milk in it. So it's just a shake every morning. It's 400 calories. Shake in the lunchtime, 400 calories. So it's got every nutrition you need. So it's basically kind of like, imagine if you're going onto the space station and you just needed to eat something that gave you exactly the right number of calories, exactly the right number of proteins, exactly the right number of A mineral, B vitamins, blah, 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 blah. Yeah. So if you, as a human being to operate, you need X, Y, and Z. Huel has X, Y, and Z in it. And you just go, that's me done for the morning. Simple as that. So if you want to lose weight, it's amazing for losing weight because it can 100% controls your calorie intake. And if you want to maintain weight, calories in, calories out type exercise, it's exactly the right number of calories. And you don't need to worry about, am I eating too much crap, or am I not eating enough veg, or am I not eating enough this? Because it's got every vitamin and mineral your body needs in it. You just don't have to do anything. Fuel. That's my account. Don't go to my account. Yeah, that's what I have. I have the black edition, which is the high protein. So it's 80 grams of protein. 40 grams of protein, 26 vitamins and minerals, and a free t-shirt. I've had this for ages. I've been hueling for years. Just easy, especially when you haven't got much time. It's fantastic. Basically, get water in that shaker. You get water. You put 2 scoops of powder in it. You go like that for about 30 seconds. Drink it. You're done. The lazy man's breakfast and lunch, basically. What more do you want? Right, S&P. A little bit stuck inside bar. Looks like we are trying to go short. NASDAQ's broken short. DAX is broken short. Dow's trying. Not a lot of direction at the minute. We'll see. It does look short, though, at the moment. Come on, trigger my short so I can see what happens to my margin. Horrible feeling. I'm going to get margin called. We'll see. I do the same, but with Y food At the minute, breakfast and lunch, evening dinner. Yeah, why food? There's a lot of them out there. Basically, it's just nutrition, basically. Isn't it? Short on the S&P. 299% margin. Perfect. Perfect. Got enough margin to trade on. That's good. Afternoon, Neo. Bowling league last night. Liquid diet was in full force. Always good. That's the sort of liquid diet I have my liquid diet for. So if you have a liquid diet in the day where you control your calories, it buys you beer tokens. You can spend the beer tokens at night on the calories that you haven't consumed in the day eating a load of crap. Calories in, calories out. I'm allowed X number of calories a day, and if I can make them up with beer and wine, I will do that. So I always say to my spinning instructor, I only come spinning for one reason, because if I can do 2 spins a day, that buys me a bottle of wine. All about economics, you see. Burn 700 calories, drink a bottle of wine. No repercussions, apart from liver and all the other internal organs that don't like you drinking lots of wine. But anyway, not that I drink a bottle of wine a day, obviously. That would be bad. When you get to a certain age, you start to look at diet. Yeah, exactly. So when you get, I do 8 spin classes a week. So I burn on average about 550 to 600 calories in a spin class. Yeah. So when you get older, your metabolism slows down and drops, and you can put out a lot less. Your metabolism burns at a slower rate, and after exercise, after a HIIT class, your metabolism doesn't burn for as long. So that's why it becomes a lot harder to lose weight when you get older. So the best way to actually maintain a good weight and not turn into one of those old beach ball people is basically to restrict your calorie intake. But you've got to keep up your vitamins and minerals. So what most people do is they just eat something with low, either a high calorific density or a low protein or a low like vitamin and mineral intake. And that doesn't help your body function. So that's why Huel is so good, because it gives you, your body just gets everything it needs and exactly the right amount of calories, which is just easy. For lazy people like me, it's just spot on. Breaking long. Well, Dow's breaking long. Going to get hedged on the S&P as well today, by the looks of things. It's going to be one of those days today. If the S&P can break short, and I can hit target on the S&P, I can use the S&P and the NASDAQ today, and the Dow, DAX today, to offset the NASDAQ and the Dow Jones, but we'll see. See where we go. Do you know any platform where I can use higher leverage without the risk of negative balance? Pretty much every platform. Don't use eToro. eToro are a wild scam. Well, I'll take that back. eToro advertise on television. Who do you think their target market is? Dumb people. I'm not saying you're dumb. I'm just saying any Forex broker that is advertising on television as an investment platform, they're not after anything but your money, are they? That's why you've got 1 to 20 leverage. You need to use a proper broker. Use RoboForex. There's a link on the website. I think I sent it this morning, didn't I? Go on to here. Why can't I right click and link? There's a link to RoboForex there. But yeah, if you want, this industry is geared up to kill you, basically. If you want to make money in this industry, you have to take risk. If you want to take small amounts of risk, you can go with a broker in your country. And if there's any issues and you go into negative balance, which you won't do because they will margin call and shut you down before you get anywhere near that, you're protected by your local authority. If you go overseas, there's no local authority protection, but your broker will also shut you down way before you get there. You get margin called. It's all automatic. Yeah. So if you are long on this and all of a sudden you get a spike that goes like that within 10 seconds and your account goes into negative balance by $300, $3,000 or $30,000, the margin call will kick in and close all your trades at whatever the accurate price it could get there. So you won't hit that ever. It has to be something catastrophic, like a peg removal on something that you would never trade because you don't trade pegged products anymore. No one does. So it's just not going to happen. If you're worried about it, put 50% of your money into a broker without negative balance protection. It's just not a thing anymore. That's not going to happen. Unless you're really over leveraging and gambling, then yeah, I mean, if you go in with 70% of your margin requirement and it spikes like the yen did today, yeah, you're going to go into negative balance. But they've got to come and get you and find you. You're not in their country. It's just not going to happen. So I just don't worry about it. If you're worried about everything that could go wrong in trading, you wouldn't trade. This market's not going anywhere at the moment. We'll have a look at the FX pairs while we're waiting. We're just not going anywhere. Back to square one inside initial ranges. Apart from the Dow has actually managed to break new highs, but no move on the NASDAQ, and the S&P is holding resistance at that level at the moment. A lot of volume coming in there. You can see how jittery the market is. A lot of volume coming in because we've got a lot of earnings today. Process. Hopefully we'll get a break today. Wouldn't be trading if you drank a bottle of wine. No, I wouldn't be trading if I drank a bottle of wine. No, I probably wouldn't be trading the day after either if I drank a bottle of wine because I wouldn't be clearing the head in the morning. So when you get older as well, when you get to a certain age, I'm not telling you what my age is, but it's a certain age. It takes 2 days to get over a hangover, at least. So this is why I try to drink, if I can, on a Friday, because it then gives me Saturday and Sunday to get over it, and hopefully by Monday morning I'm 30% back to where I was on Friday afternoon. All you young people out there will know this when you get to this age. I'm not old, but older. Afternoon, Crom. eToro is great for buying stocks and just holding them. Yeah, it's an investment platform. That's why you've got low leverage. It's not for trading, it's for investing. It's for investors, eToro. It's not a trading platform. You can, but it's not what it's designed for. I'm 18 and I hate alcohol. Daniel, stay that way. Honestly, stay that way. Don't have it if you can possibly not. Find another vice like parachuting. I'm 25 and it takes me 2 days now. Outro, you're screwed when you get older. When you've doubled your age, you basically won't be able to get out of bed all week. Do you know what the best thing for a hangover is? And this is 100% true. A spin class. If you go and do a spin class for 45 minutes with a raging hangover, 45 minutes later, you will come out of there stinking puddle of alcohol on the floor, feeling amazing. It just gets the whole lot out. It's amazing. And if you're really brave, do a double spin class. Do an hour and a half. Even better. Cold water dip does the job. Yeah, but somebody's just died from doing a cold water dip as well. So it does the job as long as it doesn't kill you. Mind you, the Swedish and that have been doing it for years, haven't they? Jumping into ice holes and stuff. Not for me. No. Looking like we're going short again. We have total indecision at the moment. So we'll go and have a look at the FX pairs while we're waiting for this to decide what the hell it's doing. We've got some ADRs going off, so we'll have a look at those. Right, starting off with oil. So oil, we've had an ADR hit today. M5 reversal alert has just triggered. No, it hasn't, not quite. Just about to trigger on oil. So that was the last batch of buyers before we broke that low, hit ADR, bounced off. So if we get above that level, those sellers have failed in their attempt to go short. So there's an ADR hit there to the downside. That's a higher low that's going in at the moment, which is also good. So there's your lows. It's another higher low. So looking for a break of that high. Looking obviously for a long-term move to the upside on that. Aussie dollar CAD. So this one's an ADR hit to the upside. Aussie dollar's really rallying again now. If you look at all the Aussie pairs, apart from against New Zealand, because obviously New Zealand and Aussie pushed together, we're doing pretty well. This is the move that I was expecting off of the CPI figure. So with the CPI figure that we got for the Aussie yesterday, all this nice green numbers, meaning that you can put your interest rates up further. Australia, I was expecting a really big rally. We didn't. We just got it reversed very quickly. So hopefully this will be the start of some strength coming through in the Australian dollar and the New Zealand dollar, but we'll see. So Aussie CAD hit to the upside. So obviously you can drop down M5, take a reversal. That's going to be quite far away, that one. Quite tricky to get into. But that is nicely extended. Be much nicer up in that propulsion gap. But equally, I think I'd much rather be longing that one at the moment. But anyway, we'll see. So I got out my shorts today on that one from Tuesday. Yeah, and that's pushing up nicely. So reversal potentially on that one, but I'd be more inclined to say that that's the market structure at the moment. Yeah. So it is a short, but it's a counter trend short. CAD yen. So all these yens I'm not going to go through anything yen based because obviously we have no idea what's going on with the yen after the whatever it was today. So we've obviously had this 175 ADR move, which happened within minutes. Again, it's another large dump into the yen by the Japanese, but it's not an intervention move. An intervention move would be way, way, way bigger than that. But the market seems to have got the message at the moment. So we are starting to come back down on this US dollar yen. We've just had figures for the US, which are mixed. So we've had decent GDP, but GDP is a byproduct of CPI and interest rate. So it's what we call a secondary, or it's not a leading indicator. It's more of a, what depends on what you call it, but I would call it a reactionary indicator. So it's a reaction to banking decisions. So leading indicators are things like CPI, interest rates, unemployment, that sort of stuff. Reactionary indicators are byproducts of what you do with those things. So not as important, but an indication of how the economy is going, which will obviously influence the central banks as to whether or not they decide to promote the economy or try to reduce the economic growth. Unemployment, as expected. So there's no real advantage to any of this. Although it looks green, there's not really any figures there that are positive. Home sales coming out in 10 minutes. For all the yen pairs, regardless of whether they're US, CAD or whatever, I'd be looking for still shorts on everything. The US obviously is having a bit of a down off of the back of that news event, but either way, if you look at all of these, the yen is powering up slightly, not massively, but slightly. So we'll see what happens with that. New Zealand dollar's really hammering it today as well. Euro odd is extended on RSI, so we've got a 125 there. Again, euro came down off the back of that news against the Australian dollar, which is rallying, which is why you got 125 ADR. You got a weak euro against a strong Australian dollar, meaning the move is bigger. Breaking to the downside on the indices. Not all of them. NASDAQ and S&P are. The Dow is stuck tight. Look at that. Nice break on the NAS and the S&P. The Dow is bullish. So some obviously purchasing going off of the stock earnings in there. So stuck fast there, but these two are melting or trying to melt anyway. So we'll see where that goes. Oh, that's a bit tricky, that target. My target is below the pre-market lows. So I'm just going to keep an eye on that when we get down to that pre-market level, because I don't want to bounce out of that pre-market without taking profit. but we'll see where we go. The NASDAQ, basically the NASDAQ's ahead of the S&P at the moment. So this obviously hitting that pre-market low is going to get me out and try to get out of that hedge. This one will just be TP1 if it gets there. So look at the Dow. So I'm just going to watch this when we get down to that level and just decide whether or not I take that one off down there. It will depend on what these hedges are, because obviously I've banked 1,500 this morning. If I can get this up to 3 grand, i.e. 1,500 there, 1,500 there, I can take that 2-3 off and bank $700 today. Not great, but not a loss. So Euro hits the downside, 5-minute reversal alert. Just wait for that if you want to go long on that one. There's no real advantage either way on the Euro at the moment. It's more bullish than bearish, but that's because we've had a very, very weak Australian dollar and New Zealand dollar. That situation has changed with that CPI number. So this could well be the market structure shift here. So there's your high, low, lower high. We could be looking at a move back down now with the Euro. So Lagarde hasn't been particularly bullish or bearish today, but with the Aussie dollar, we've had really good CPI figures, which means the interest rates could go up, which will power up the Aussie and the New Zealand. So this could be potentially where we're shifting to the opposite side. I'm out of my long way too early, but we'll see. I need it to get extended before I get in personally, but Euro is extended to the downside. So you could be looking for a quick scalp on this. Sort of back up into there. That's continue down, or it could just collapse down into that propulsion gap, in which case then you could look to buy that up. Obviously don't know which way it's going, but that is extended. Euro pound, it's extended as well. Again, Euro coming down against the pound, which is unusual. But yeah, I mean, really wouldn't know what to do with that thing at the moment. I don't think I've traded the Euro pound for a good month or so. Literally have had no trades on this at all. Just not going anywhere. It's really, really contracted. So for intraday purposes, you can see how volatile it is intraday. Yeah, so we got an awful lot of up and down movement. So basically, if you'd have hit the button long or short at any point in the last couple of months and then gone, I'll have to add another one, about a third of an ADR, half an ADR to an ADR apart, you would have got out of every single trade you've ever taken on it, because it's just going up and down like that all the time. So we've got an ADR hit to the downside, wait for the reversal alert. If it goes up, brilliant. If it doesn't go up, you're probably going to get it go up from there. So it's an easy long 5-minute time frame, but it's a bit far away because of the speed this euro is coming down. Market's really not having a good reaction to this euro. We are melting now. 3 charts open and I don't know which one to click. So the Dow's still inside bar, inside the opening range. Good 3-hour move down on the NASDAQ now. S&P still not got to 1 hour yet. DAX not really moving either, but we are on the march to the downside. If this Dow can break this low and get a good flush out of there, these will get a decent push down. It's going to be really tricky today. Just going to move my target up just inside the pre-market lows. Just in case we're sitting on a load of limit orders at that level. If we are, we're going to bounce, and I would like to be out of it rather than potentially getting hedged on that as well. See where we go. So there's Euro pound, not great extension. Euro New Zealand again. This one hit to the downside. Again, Aussie dollar and New Zealand dollar both powering up. We've just had a structure shift on this one. So if you look at where we've been going for the last week, it's nowhere. I'm short on this at the moment. Again, I'm expecting this Aussie and New Zealand to power up off the back of the CPI figures. So that kind of movement. So not the best ADR reversal to take. Upside reversal will be much nicer, I think, at the moment. But we are still in an uptrend on this one. So could go either way. But I'm short on this one at the moment. Got 5 on this. Average is 175 ADR. So hoping we get a breakdown, and this is the structure shift back down to the opposite side. Got quite a lot of volatility just coming in now. It's 3 o'clock. It's the hourly candle close. So you get a lot more orders entering on the hourly candle close. There we go. Dow's gone. So just watching these levels. We've got this area here that's been bought up a couple of times today as well, which is where we are right now on the NASDAQ. Back to that in a minute. Euro New Zealand, so not the greatest reversal. Pound CAD, again, these are all just hit ADRs type of thing. So big, strong move on that one. Pound today, fairly strong. So it's massively strong, but this is weak Canadian dollar, isn't it? That's basically why this is pushed. Yeah, this is weak Canadian dollar based off of this oil drop. So pound CAD, obviously potential reversal opportunity there. So drop down M5. No reason why you can't take this one short and just play it back down into that big propulsion move. So reversal, that's going to go in there. So it's quite a nice tight reversal there. You've got 2 levels here, which are weeklies. So this is these weekly highs. So that's the high from 3 weeks ago. That's the high from 2 weeks ago. We retested it this week twice and rejected, and we're testing it again. So if you want to scalp trade, wait for the 5-minute reversal and just trade it back down into there in case it's going to pop. And if it pops, there's very little support resistance there that you're going to get caught up on. So it could well go all the way up to there, could anywhere. But there's your monthly level. So that would be probably your next stop. But this could go either way, and as you can see, it is very much the same. Up, down, doesn't matter which way you press the button. It's going up and down all the time. So if you press the button short there and it goes up a bit more, you could press it there and wait for it to come back down. If it comes straight back down, fine. Yeah, it's just very, very sideways. There's a lot of potential movement on oil to the upside, obviously. So that will power up the Canadian dollar, which will obviously bring this down. But it seems to be holding its ground very nicely at the moment, the pound. So that's extended to the upside. Potential short opportunity. That is just starting to come back down again a little bit. So there's your reversal. Quite a tight one today. New Zealand dollar CAD extended to the upside. This one a little bit more tricky to get into today. So you've had a reversal alert on this. Oh no, you haven't. I thought you did. So no, you haven't had a reversal alert on this. It's going to be tricky because you're going to. That's about a third of an ADR before you're going to get a signal to go short on that. So it's not particularly great entry. I had a break-even exit on this. Look, missed it. Never mind. New Zealand dollar. Really think we could get some strength on this based off of the Aussie dollar movement. So we are now putting in potentially a new high and a higher low. So market structure is shifting. We need to break that high, which is above 150 ADR. So it's going to be very difficult for it to achieve that today. But a nice pullback into that propulsion gap and bounce out will see us back up into this high. That's what I'm looking for it to form a range on initially. But hopefully all the way back up there. We're going to need the Canadian dollar to weaken though, and we've just had positive news from the US. So probably not going to do too much today apart from what it's already done. New Zealand US, pretty much the same. That's a hit to the upside. It's already started to come down. I've got longs on that one. So 5-minute reverse alert on that. I think you've already had it. Yeah. So there's a reversal that's just gone in literally in the last 5 minutes. But I'd be looking more for that sort of movement. Keep this US dollar, Aussie and New Zealand rally going. I'm targeting this high, this propulsion gap. Yeah, so we hit that low, broke it, retested, 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 retested. So looking for it to retest that level on this New Zealand dollar strength, but it will probably get rejected again there. But I should be out there anyway, so I don't care. And US dollar yen, which we know about. So the intervention, we get precursors to intervention where we get large orders placed, and which are shocks to the market. And then eventually at some point they just get fed up and press the button and they move that 600-800 ADR. So we'll see what happens. But this is a warning shot again from the Japanese. You've surpassed that 150 level. We told you we didn't want you to go above there. So that's a shot across the bow. So will the market listen or not? If the market doesn't listen, the Japanese will make it listen. So I still have no problem being short on it. However, the last intervention move was at 152. So there's a long way to go. Potentially a lot of drawdown that I could take on this. So I'm monitoring it basically. I might have to scale out of a little bit if it does continue to push up, but that's a good move. So hopefully that will come down. We will see. Dow's getting bought up out of the propulsion move on the news. Can you check Aussie New Zealand? Yep. We've got some RSIs as well. Oh, we haven't actually. They've all gone off. There were RSIs this morning, but all we've got at the moment is US dollar CAD, which is extended on the 4-hour still up there. So nice extension. Again, just same as this one. Looking for a pullback into either that level. There is a danger of it coming back into there, but that's where I would expect it to get back to. And US dollar yen, which we know is just does whatever the hell it wants at the moment. Aussie dollar New Zealand. So shorts on this one at the moment. It's a very difficult one to trade, Aussie New Zealand, because they tend to move together, which is why you get a lot of this. So when the Aussie and the New Zealand get news, they tend to do the same thing together, which means they don't really move very far. It needs something that affects one of them but doesn't affect the other from a trade perspective to get this thing to move. So we've just had a reversal alert on this. I'm very, very close to my average to get out of this. So this accumulation here, which we had for like a good week, and then we finally broke it. This is potentially just a price discovery move, which we're going to push back into and then fade back down into this range. So targets, as you can see, are all the way back down into this initial propulsion gap. So very much the same as the move we've just had play out. So we accumulated and broke, left all these propulsion gaps behind. Yeah. Then we came back up and filled all those propulsion gaps, V-shaped recovery. So I'm looking for an A-shaped recovery at the moment. But if it is going to be a retest of that high pullback long, then we're looking for a pullback on this leg here before we step up. So we'll be looking at 38, 50, 71.8 retracements. So if you stick a fib on it, yeah, 38 retracement is all the way down here. That's what I would expect as a minimum. If we're just going to get a flag break, yeah, we'd be looking at something like a 23 retracement. So this area here is key as to whether or not we bounce off of this area. And if we do, we're probably going to break that high and off we go. So it's quite a critical level we're at the moment. This level here needs to break. If it does break, though, it's going to flush at least down to here somewhere into these propulsion gaps. So obviously the Aussie has had the good news. However, the Australian government and bank haven't come out and said they're necessarily going to do anything with interest rates at the moment. So it's not really bullish or bearish in any way either. So could go either way. I'm very close to an exit on it. I've been stung with Aussie New Zealand in the past. So I'm always very cautious of this one. Same with the Euro Swiss, because it's hard to get out of it. When you get into a number of positions on it, it goes into ranges because obviously we get strong moves with both currencies at the same time. So that's basically what happens is when you get a strong move against a strong move, you get a sideways move. So you get a lot of this stagnation in it. So what it can do is it can push hard, stagnate for ages, and then push hard again, stagnate for ages, then push hard again, stagnate for ages. And you never get those profit takes, those pullbacks on the moves. As you can see here, look. Yeah, huge, strong flush, tiny little flag. Yeah, no real profit take move. Then the profit take move starts. Yeah, that's the sort of normal market structure we expect to see. Decent pullback. Yeah, push up, decent pullback. So, you know, this is a good example of market structure and like pullbacks. So there's a 61.8 pullback on that move. Then we made that move. We made a 50% pullback on that move. Yeah. So sometimes it just goes like that and doesn't bat an eyelid. So I'm hoping we get a pullback on it. If not, it could well sit here and then do another leg, which is going to be a problem. So I'm watching this fairly closely, and I'm, you know, glad we got this reverse alert this morning, but it's bullish Aussie. So if this gets down into there, it's probably one of those I would say, right, I've been in it for a few weeks now, hasn't worked out. I'll get out with a little bit of profit and just walk away. But we'll see where it goes. We're just getting bought up on the NASDAQ at the lows. So where we started this leg, we're just getting bought back up, but this is probably just them taking a bit of profit before they continue down. A little dangerous, this one today, especially with the NASDAQ, because the exit here is a long way from ADR, because we've had that big push up. So an ADR move to the downside from that high obviously is there. But my target is sort of 3/4 of an ADR. So it's a bit of a tricky exit, this one today. I just want this one really to hit target, because then I don't have to worry about that. But we're not really getting any movement on that either. I wasn't here to catch your London session. Did you end up shorting any yen pairs? So I'm not in any other yens at the moment apart from the US dollar yen. No, I did take another entry on that yesterday before the market closed, so I took one there. And then this morning we pushed up, and then obviously the yen kicked back. So I did take another one yesterday, but no more today. Got to spread these out. This is not a normal position trade. This isn't being taken with the EA. This is me doing all of it manually because I'm expecting an intervention. It's a very, very risky trade, and it could backfire. But it's high risk, high reward. When the intervention comes, we'll be looking at it being down here within literally within 8 hours, 12 hours, we'll be down here. That's the previous intervention, which was tiny in comparison to what we will be expecting when they do it properly. So assuming they do, you know, this is the thing. So it's a very high reward trade, but high risk in the fact that we've still got a long way to go, potentially to get to the previous high. This is the all-time high, 152. It could well squeeze all the way up to there. They might fight back, but they will at some point just liquidate everything and buy the yen, and it will just go. But what you've got to do, I'm fully expecting that. Whether or not the market does that over a period of weeks, naturally, or they do it within 8 hours because the market's not playing ball, I don't really care which. But what you've got to do is survive that. You've got to survive the drawdown up to there before the move kicks in. So it's risky, high risk. But with great risk comes great reward, as Spider-Man's uncle used to say. That woman who passed from the Cold War to dip. It's a bloke, actually, in the UK. So there's 2 people that have died from it. Had hypertrophic cardiomyopathy. Are you impressed I read that? I had to think about that one. Thickening of the heart muscles. Lots of people have died from cold water dips. Shock to the system, isn't it? Google Primanti's sandwich. That's my hangover cure. I'm always wary when people tell me to Google something that I don't know. Oh, yes. My God. What's that? Pastrami, chips, and salad with cheese. That's what I call a heart attack waiting to happen. How many calories is in that? It's probably 2 days worth of intake. Notice how on good food they don't tell you how many calories are in it because you wouldn't eat it. But yeah, that does look good. I wish I hadn't seen it because now I really want it. NAS at the daily gap from May. I have to go back on there, aren't I? I need to go to the 4-hour chart. This is how relevant that information is. It's miles away. Market's forgotten about this, forgotten about May. I haven't got a gap from May. There's a gap here in May. But other than that, this is just the double bottom after that propulsion move. So this is a propulsion gap. So accumulation, break, double bottom, bounce. So this blue area here we're in is where they bought from last time. Hey, guess what? Everybody that trades the 200 moving average right now is buying the NASDAQ. They are all going, hey, look, everybody, it's on the 200 moving average. Buy it. Fortunately, the NASDAQ doesn't know about your 200 moving average, but it is on it. Out NASDAQ short, scalping from here. Ooh, you're brave. You're out of the short already. What I want, which is not what I normally get, but what I want is this to continue bearish for the next sort of 10 to 15 minutes and just keep pushing. The sellers keep selling because the faster you get to a level, when it does hit a wall of orders going the opposite direction, the faster that move back is. The elastic band theory, yeah? So the more stretched we get, the less buying power, less pullbacks we have on the way to our destination, the quicker that move comes. And with, especially with this stock index hedge strategy, when you're using an aggressive exit, if you can get to your target without stopping, when that pending order goes in, that pending order gets triggered, and very often within 5 or 10 minutes, you're done because it's moved there so quick. It's got that elastic band stretch back. The ones that are harder to get out of are where the market moves like that because it's not stretched, it's not extended. They're moving, profit take, move it, profit take, move it, profit take, move it, profit take. There's no massive extension of one big sell order that needs a massive profit take happening because that's why those happen so fast, because everybody does it at the same time. If everybody has been incrementally taking profit along the way, there's no one party that's massively overloaded and needs to get out quick. So I'd much rather this just slammed straight down into that low as fast as it possibly can. and let those limit order triggers push the sellers back so that they get scared shitless and they become buyers by exiting their position. That's why you get that pullback. So hopefully you're wrong, Brian. Someone's got to be wrong. Someone's got to be right. No offense, but I'd rather it be me today. There we go. New lows on the NAS. Good rejection on the S&P. But we are entering that 15-minute buy. So if these guys are still long from here, they will be getting longer, or trying to anyway, depending on whether or not they're going to get run over. We'll see. Dow's very heavy as well. Look, big wicks on the Dow. Let's see, we've got some buyers coming in now. Might start a pullback. Oh, big order came in there. So just popped new high on the S&P. So that's your first new higher high. So we've basically been putting in lower highs. That's your first higher high off of a double bottom. So it's the first sign the bulls are actually having a crack. However, the bears are at the moment stomping them on the head. Feels really heavy today. NASDAQ's just about to make a new low. New account. Okay, I've got 2.5 minutes left on this candle. Doesn't look like buyers are able to make a lot of progress at the minute. See how they get on. US dollar yen's pushing up again. So what I don't really want to see today with this yen is a new high, a new bull candle, basically. I would much rather today the buyers get scared out of their longs that they entered yesterday because of this move. If we get another bull move, basically, it means that this intervention, or this, whatever it was, they will never admit it's an intervention, but this order or this liquidation they've just done hasn't had the desired effect again. So this would be the second stroke third attempt they've had now, the Japanese, at trying to shock the market back into buy mode. But failed. I had a little go there as well. Yeah, so if this one fails, yeah, they're going to need to do something bigger, aren't they? It's tricky. New lows on the NAS. Okay, we're getting close to target now. So we'll see what reaction we get at this pre-market low. So this is basically 5R for me, pretty much, on the range. So Just going to watch this for bullish price action now. So as we've made a new low, we know that the sellers are still in control of the market at the moment. S&P has made a new low. So going to watch that high and obviously watch the low of that candle. So next candle, want to see a lower low, lower high to confirm that we're still in control. If we start to put an inside bar in on the NASDAQ, that will show me that we may be running out of sell orders, in which case I then need to be on alert basically for a pop, which case I will probably manually close it out. But it looks like it's going to hit target anyway. But we'll see what happens with this candle here to see where we go. Dow is totally stuck. So we're 20 minutes now stuck. Big order just coming on the Dow again. Buyers trying desperately to add into this move, but just getting smacked back down again straight away by the sellers as soon as they get up to those highs. Not this time though. S&P is trying the same thing. So we just got a new high and low on that one. So that is an outside bar. So basically, buyers tried to take control, failed. Sellers took control back. Yeah, so sellers still firmly in control of the S&P, firmly in control of the NASDAQ. Not anymore. Well, NASDAQ they are still, but this looks like it might be an area to get out of the shorts. Okay, what I'm going to do, I'm just going to wait for this candle to close. We're closing at the moment as an inside bar. We just made a new high. It's a second high. We've made higher high on the S&P. Dow has just made a decisive move up into that area, but the sellers are trying to take control back. So this is quite a critical candle. If we maintain control here and here, the likelihood is that's going to pop. So this would probably be a good point to manually exit and then try and get out on a pullback on that move. So limit orders, when they trigger at a level, it's never to the pip. It's an area. So this is where we started buying. This is why propulsion gaps are there. We started buying in this area. So somewhere in this area, if we're going to continue this long, we're going to buy it again somewhere. Never exactly on it. Often you will hit through it and then those triggers will kick in. So this is why you put your target somewhere around. You never know where it's going to be. Okay, I'm closing those shorts on the NAS. Oh, I've already closed one. So see if I can get a limit order trigger. So obviously, because the way this EA works is it places pending orders above the high of the previous candle. Obviously, the previous candle's high is now below price because of where I exited those orders. So normally the EA would be doing this on its own, but when you do it manually, obviously it just goes above the high of the last candle. So the orders will be moved up to there if this remains in there and doesn't trigger them. But hopefully we'll just push back down and trigger those. So danger here is obviously what this move is just to pull back on a short, in which case I'm wrong to get out. However, if this is a buy at this low, this pre-market low, that's exactly where I want to get out, and I'll exit this one with a profit. This one is already profit, which leaves me stuck on these two. There we go. So buy stops moved up above that candle. So basically now we've got a bull candle in place. Looking for the buyers to continue this move. If they do, I'm in with them. And then look to get out with about $700. Tough today. 142.67-ish area is what I'm looking at on the NAS. 142.67-ish. So that's the initial breakdown, and that's where we confirmed we're short. So if we're remaining short, that little propulsion is tiny propulsion gap there, but that is indicative of where that move started. So I don't think that's going to be far enough for me to get out. Might be. Uh, 292. That's 350. Might be close enough. We'll see. So the plan basically is, if I can get out of this one with a small profit, that one has done $1,500. If I can get out of that with around about $500, that puts me on 2K. If I can close this one out with $0 to $1,000, I can just close this hedge and walk away with a nice profit for the day. Best laid plans and all that. But that's the plan anyway. Don't like this price action on the Dow. Look. Very seller heavy. So that accumulation break, that propulsion gap, they've just filled that propulsion gap and they are not letting that go. So this is where we started the buy move. Buyers are adding back in. This is where we started the sell move. Sellers are adding back in. So whichever of these levels breaks is going to be the flush or the pump. Hopefully the pump. Because if the Dow goes long, it will take the rest with it. But it looks like it's flushing, which means that's the wrong thing to do. It seems like I did not make an informed decision in choosing MT5 instead of MT4. New lows on the Dow. Running a laptop with your indicators sometimes stops candles to move and is very slow. Yeah, MT5 is an absolute resource hog. It's awful. Just awful. You need a lot of power to run MT5, and it's just glitchy. MT5 is just glitchy. It's just really buggy. Everything just takes forever to work on MT5. It's just crap. Just don't use it. If I had my way, I wouldn't have any of my indicators available on MT5. People asked for. I didn't used to. I used to run everything on MT4. I used to release everything on MT4. Everybody moaned at me because they wanted to use MT5, and I kept saying, "Why? Show me a reason you should be using MT5 above MT4." And everyone went, "Strategy Tester's better." I said, apart from that, because it's bugger all to do with really real world trading, why is it better? You can't give me any reason why MT5 is better than MT4. It looks more modern. Who gives a crap? It's a candlestick. I don't care what it looks like. It goes up and down. It tells where price has been. Yeah, it's just 10%, less than 10% of my sales of my indicators. There's not many of them, so it's not a really good gauge, but less than 10% of my sales on my stuff is MT5. 90% plus is MT4, which just shows you everybody's still using MT4. I don't know why they still even have the bloody thing. I know why they do, because they sell licenses to brokers for it, but nobody uses it unless you're forced to. There's some prop firms out there and some brokers that don't use MT4. Yeah, as Cody just said, check how many bars back in the chart. That could help. So if you just go to your settings and go to charts and then change the max bars and your max bars in history, reduce these numbers down. You've got to be a bit careful with them. I mean, if you put it on 5,000 and then try and look at a 5-minute chart and scroll out, you won't even see the full picture. So you got to be a bit careful with inputs, but just not very good. I mean, if you have to use MT5, I would just use MT4 for analysis and use MT5 to trade on, because it's just a button, isn't it? At the end of the day, you're pressing to go long or short. So do analysis on MT4 and trade on MT5. It is annoying. It's the only software platform out there that has got two, like multi-charts, Rhythmic, Ninja Trader, Trading View, Tradervate. Yeah, that is it, isn't it? MT4, MetaTrader, 4 and 5. Why? Normally when most companies release version 5, version 4 doesn't exist anymore. You get version 5. They released 2 side by side and went, which one do you want? Why? They both look the same. Yeah, but this one you can get futures data. Great. I don't want to use that for futures because there's a billion platforms better for futures than MT5. Oh, we're going to sell it anyway. That's basically what they did. I don't know why. And then in the marketplace, and I have said this many times because I get told this many times, why can't you just have one license for that customer and let them choose whether they want to use the indicator on MT4 or MT5? Why force them to buy the same thing again if they want to use a different software platform? Just doesn't make sense. It's all for money making, basically, isn't it? Which is why I just say to everybody, if possible, just forget MT5. Just not good. Sort of like Ed 209 and RoboCop remake. Yeah, more modern, but still runs like crap. It's the fact that they keep breaking it. This is the problem with MT5. They break it on a regular basis. It forces updates. It's like Windows, where you can't, you can turn off auto update on Windows, but every now and then again it goes, it's not looking, quick update. And you're like, hey, hang on a minute, I turned that off. It's like, yeah, but this is an important update. MetaTrader does the same thing with MT5. You launch it and it goes, shuts down. You're like, why did it shut down? And then it goes, I've just updated myself, but my indicators don't work. Yeah, we'll get around to that at some point. Bug list. That's what they do. MT4, they haven't updated it for ages. Why? Because it bloody works. It draws candlesticks on my chart. I don't need it to do anything else. It's an analysis tool for being able to see where price has been. I don't need anything more complex. And everyone, like somebody just mentioned, TradingView. TradingView looks pretty. Good for TradingView. Yeah, there's a lot of pretty ladies out there, but a lot of them are very high maintenance. Might look good on the surface, but when you dig underneath, all it does is exactly the same as all the other ladies. That's a really bad analogy, that, isn't it? But you get what I'm saying, yeah? TradingView might look pretty, but at the end of the day, it draws these things on the chart and tells you where price has been. I don't care if it looks pretty or it looks ugly. It gives me information that I need to be able to execute orders. That's it. All it does. Doesn't need to look like a supermodel. It just needs to perform the task I want it to, which is telling me what the information I need to get out of the market is. What's my view on TradingView connected to brokers? It's just a charting platform. It's just an online charting platform. It's just all it is, isn't it? But I don't use it, so I can't really comment. I can't tell you whether it's good, bad, or ugly because I don't use it. So I have used it. I went to the Forex Expo in Dubai and there was a MetaTrader booth. They are highly promoting MT5. They told me that they are removing support for MT4 and we need to know now. Yeah, I know they've said that, Mandy, for many, many years. However, I will reiterate what I just said about my indicators. 90% of my sales, therefore extrapolate that out to the entire marketplace. 90% of MetaTrader's sales revenue comes from MT4. If they shut that down, it would be commercial suicide. Yeah, they're not removing support from a platform that makes them millions of pounds. It's not happening. They may do at some point in the future, but what they will then need to do is figure out how to placate their entire customer base by not forcing that 90% to spend every penny they've ever spent in their life again by forcing them over to a new platform. It's like Windows turning around and going, you know, you bought all that software for Windows. We've relaunched this new thing called DOORS. It's replacing Windows, but nothing that you've got in your Windows is going to work in your DOORS. So you need to buy everything you've ever bought for Windows in the past now for DOORS. Okay? Hello, Apple. Oh, you've only got one platform and you're not changing. Thank you. What do you think that's going to do to MT5 and MT4? It'll kill them. They're not going to do it. And if they do it, that's fine. It's the end of it, isn't it? And I'll just move over to another charting platform. But it's not going to happen because 90% of their revenue comes from this platform. So it's just not, you know, it may change, you know, if it gets to the point where MT5 sales overtake MT4s, then possibly that might happen. But it's a long way off. MT5 has been out for 15 years. 2005, 12 years. I know that's not it, is it? Oh, that's the new MetaTrader. Oh, 2010. There you go. So it's 13 years, right? So it's been out for 13 years. And yet 90% of their traders are still on the old one. What does that tell you? What does it tell them? Is it? If something hasn't replaced something else in 30, it's like saying, here's Windows XP, here's Windows 11. You still on Windows XP? Why? Because it's better. All right, here's Windows 12. Any better? No, we still like Windows XP. Yeah, get the message, Windows. Stop releasing new ones. We're not buying them. It's the best analogy I can come up with, but Windows and doors. Triggered onto an aggressive exit on the NASDAQ. So we've got a double bottom. See what happens. Really have no problem with MT5. Not slow, no bugs. The first and only problem is ignores the use fake stop loss command. Amy, there's a problem. It might be your only problem, but it's a problem. Nobody on MT4 has that problem. Doesn't matter how many problems you have, it's still a problem. And it's quite an important one. When you're position trading, what's the one thing in position trading that differentiates it from every other strategy in the world? The stop loss. What's the one thing MetaTrader 5 doesn't do for you? removed the one thing you need it to do, which differentiates that strategy from the rest. I rest my case. But only at 8 cap. And again, that's the worst broker in the world, isn't it? But yeah, there's always a fix. There's always a fix. I'm finding more and more problems with brokers now because I've got a few more things on the marketplace now. And I'm finding lots of people coming to me with problems. And when you have a problem, you have to get information about why that problem occurs. So either it's not triggering an order, it's not triggering the right lot size, it's not doing this, it's not doing that. And I'm finding the majority of the problems caused are not by the platform or by the EA or by the indicator, it's by the broker. For some reason, brokers are not executing orders in the same way now. And I think with 8 cap specifically, they power tons and tons of prop firms. Basically, 8 cap is a white label prop firm machine, isn't it? So all these prop firms are, I think, putting things into place using 8 cap as a broker, which are just not right. I've got one customer, one guy that's bought the stock index hedge EA or something. I think it was stock index hedge EA, and it wasn't taking the right lot size. And I was like, well, I've tested it. It does. It's absolutely fine. And it was down to the broker. The broker was feeding the wrong account information to the EA. So in your terminal, your broker feeds out lots of information to you. One of those things is your account balance. Because the prop firms pretend they're giving you a 100K account, but actually it's a 10K account with a huge leverage, what it was actually reporting to them was completely the wrong account size. So the EA was going, this is a 10 grand account. I'm going to take a lot size as appropriate to a 10K account. And then they were saying, well, I've got a 100K account. Why is it taking a tiny little trade? Because your broker's feeding the wrong information to the terminal. There's nothing wrong with the EA. The EA is doing exactly what it should do, using the information it's given to make a decision. Your broker's giving a load of crap, garbage in, garbage out. Basically what's happening. Now you can do. Getting ready to close the S&P shorts. Flat on the S&P, flat on the NASDAQ. So aggressive loss recovery done on NAS, out with $705 profit. Got $1,500 there. This looks like it might go long. So I don't want to hedge this position because it's just no point. If it's going to go long, I just want to be out of these shorts. So 145 bank there, 700 there, 1600 there. Can't do maths at this time of the afternoon. I'm going to have to add that up manually. 1520 plus 705 plus 145 is 2,370, and I've got an $1,100 hedge on. So that's clear $1,200 profit. So I can shut the DOW out now and just walk away with that daily profit. There we go. So that's what I'm going to do. But I will leave this one running today. So we may well, I mean, it's what's the time? 10 to 4. I think it's probably unlikely we're going to get a rally on the Dow that is going to hit ADR today. It's going to take something pretty substantial for us to get an ADR run today. So it's unlikely we're going to hit that. There is a possibility that we are going to just put a market structure short in down to that pre-market low. So the option I have on this one to potentially try and reduce that loss today is to get out at the pre-market lows, and exactly the same as just done on the NASDAQ. We'll get out on the pullback. But I want to see it get down here fairly quick so that it pops. ADR is all the way down there. So again, to get from there all the way down to there has got to be a hell of a, look at where we are, equidistant between the two. It's going to take a hell of a move to hit ADR today. We haven't done it at the open. There's no volume at the open to get us there. We're probably going to see something very similar to what we got yesterday. So I think that's probably just going to turn into a loss today and come off the P&L. But yeah, tricky. So I'm going to leave that running. If we do get a big, strong move, I will pay attention to this for the next hour or two. But, you know, we're not going to get there, are we? So that I'll do. I'll just take that 1200 odd today. So that's the final result. 2.4 minus 1%, so 1.1.5%, which is pretty much what I banked this morning, isn't it? So absolutely wasted time this afternoon. I just sat here and wasted my entire afternoon. Never mind. If a prop uses 8 cap, gets my spider senses tingling. Yes, exactly. It's because it's not a real account. You're trading. I don't know how the industry works. I was on the verge of contacting 8 cap because they're a white label prop firm, basically. So I was just on the verge of contacting them more out of curiosity as to, I want to set a prop firm up. Can you talk me through the exact business model and give me some examples of some of your customers and how they're doing it, just so that I could get confirmation from them that, you know, exactly how it all works under the skin. But I never went through with it. Be interesting experiment to do. But I'm probably known to 8 cap now because I've been not slagging them off, but just telling people probably not to bother with them for quite a while. How much money do you use when you open a trade? So your profit is 31k. I started with a lot. 100k-ish. Basically, you when you're trading, you can simulate any account size you want to. So when you're, let's say, for example, you've got 50k to trade with, yeah? You can trade that 50k as a 100k account by just basically doubling the risk every trade, yeah? So you can also, with a 10k account, trade a 10k account as if it's a 100k account by 10xing the risk. If you do, and this is where the normal, I guess, convention that you get taught of that 1% risk per trade kind of flies out the window. If you have a strategy and you backtest a strategy based on a 100k backtest or on a 10k backtest or on any amount of backtest, and the maximum drawdown it goes to is somewhere like 3 to 5k, right? Or if it went to, say, 30k, yeah, and then you back tested it over a longer period of time or over a different period of time, and it still didn't get above 30k. What that's telling you is if you put a 30k account together, it will not blow the account. So if you risk, like I've got an account running over here, which is the one I've just put $750 in. This is actually running 4% risk per trade. So it's working as if it was a 3k account. And I will get the results as if I had a 3k account with $750. Higher risk, higher chance of drawdown, but it's a stable strategy. So I'm willing to take more risk on it. So this is basically as if it's a 100k account. But you can trade with any amount you want to, with as much risk as you want. So think about the compounding. Compounding only works if you can replicate what has happened in a backtest. So if you do a backtest, let's say you go into the strategy tester and you test with 20k because that is what you've got. And your P&L basically goes like that. Yeah. The only thing you need to focus on is that. That is the biggest drawdown from high to low that happened within this strategy. If that is only 7k, you can trade with 7k in the knowledge that in the past it's never blown 7k. So if you started off with just 7k and drew down 100% on the account with a 500 to 1 leverage broker, for example, which you can do, you can trade as if you've got a 20k account using less than half of the money. And this is how you compound. The problem with compounding and the problem with compounding courses that people sell is that they teach you to do this. They teach you to turn 7K into 14K by over leveraging it as if it was a 20K account to start with. The problem with it is you get into a mindset of, holy crap, I've done it. I've now turned that 7 into 14. So now I'm going to use this 14 as if it was a 28, and I'm going to use this 28 as if it was a blah, blah, blah. And then all of a sudden you hit that drawdown and it blows the entire account, except it doesn't just blow 7K. It blows whatever you got up to. Compounding is exactly the same as martingale. It works beautifully until it doesn't. And it always blows the account because you're over leveraging. So this account, I'm running it on a risk of $1,000, basically, roughly 1,000, as you can see here. So I'm hedged here. My risk is always going to be somewhere between $1,000 to $1,500. Yeah. So I can run this on a 10K account as long as I don't have 10 losing trades in a row. And I can make 30K or 40K a month on a 10K account, 400% return. However, it's safer to run it with a much larger amount of money. What size amount of money is entirely up to you. But my back testing has shown me that if I hedge in at $1,000 on 4 instruments, it's very, very unlikely to do more than about 10 to 15K a drawdown. Because you've got to have 4 unlucky days where you hedge every single one of them, 3 times in a row. That hasn't happened. Not in my back testing anyway. So the only way this can lose me a 10K account is by losing $1,000 there, $1,000 there, $1,000 there, $1,000 there. Day 2, $1,000 there, $1,000 there, $1,000 there, $1,000 there. Day 2, $1,000, $1,000. That's it, blown. Hasn't happened. Didn't happen today. Hasn't happened yesterday. Hasn't happened for weeks. Because of exactly what I've just shown you here. It's highly unlikely you would get hedged on every single instrument. This one didn't hedge. These 2 did. That one didn't hedge this morning. Yeah. So that didn't hedge, profit. That didn't hedge. I could have, you saw that P&L hitting $1,300 down here today. I could have taken $1,300 there. I didn't, but I could have done. And this is what you've got to do when you're running a portfolio hedging approach. You've got to look at the entire thing in one, right? My job is to make money today. If I can make money on that in the morning, what I could have done today is walked away and said, done, $1,500. What I did was I came in and went, let's see if we can get some more. I got 800 out of that. I decided to get $1,000 out of that. Now, if I can exit this hedge with the same process as that this afternoon, I could make another 1,000. But the fact that I've made 1,300 today means I'm probably not going to be that adventurous. I could be. But you're looking at it as a portfolio. So when you're doing back tests, everybody back tests the Dow and tries to find the optimal for the Dow. Back test the S&P, try and find the optimal for the S&P. What you should be doing is back testing all of these with the same strategy, merging those results together and seeing on a daily basis what was the maximum drawdown across all instruments in one go. And for that, you can use Strategy Quant. Yeah, so you can use the Strategy Quant software to analyze a portfolio of instruments. So if you run a back test on multiple instruments and then merge them together into a portfolio, that gives you what your maximum possible drawdown would be. That tells you what the maximum account would be that you need. Yeah. So this is my FX trading this month. Yeah. So far. Yeah. Aussie dollar CAD, US, Aussie dollar Swiss, Aussie dollar yen, there's all the instruments. Yeah. All profitable apart from the Euro Swiss. But I can look at the equity chart and see what the maximum drawdown would have been on account. Yeah. $2,500. It's the maximum drawdown I've had on account. So I can achieve this 15 grand result in theory with a 500 to 1 leverage account with just $2,500. Yeah, that's 2.5, 25, somewhere around 800% return, 700% return, isn't it? But you would have to be very lucky to do that, wouldn't you? So the amount of money you have in your account when you're scalping or hedging specifically, but scalping as well as hedging, isn't actually as important as you think it is. Position trading, yes, it's very important because you will be using that for drawdown. And if you over leverage, you will blow your account very, very quickly, as somebody's found out in Telegram today. But for this type of strategy, you don't need what you would put in your account as a 1% risk to actually be used, because you can just over leverage on it, because it's unlikely that you're going to get all of them hitting at the same time. You might do, but look at what I've done this month here on 30 grand. I've made 30 grand basically, right? So if I draw down by 30 grand, the worst case scenario is I'm break even. So right now, what I could do, let's say, for example, here, I could shut this long out now and go, I think this is a high, low, lower, high, low down to there. I could shut that long out now and assume that this is going to go down and exit that short, which means I'm taking this $1,000 risk and potentially turning it into a profit. What I'm also doing is this, if this rallies out the highs and pushes up to ADR today, I'm turning this into something like 7 to 10 grand of loss. But when you've made 30 grand, if you take a 7 to 10 grand of loss, it doesn't matter as much as if you had only 5 grand in your account. If you've turned that 5 grand into 40 grand, that 7 to 10 grand loss is actually a drawdown on the total capital in your bank now, isn't it? So it's just, you can manipulate the earnings a lot better when you're using this type of strategy, because you're always controlling your risk. So you've got to look at what's the maximum losing one. So let's say, for example, you use this strategy that I'm doing here and you're locking in $1,000 on each of these. A 20K account allows you to have all 4 instruments fail for over a week. Think of that as a losing run. Every day, every instrument hedging and never getting out of any of them in any way, shape or form. Yeah, if you've been in the live room for the last month, that ain't anywhere near happening, is it? That's the worst case scenario that could possibly happen. If you can build your account up using the best case scenario, which is everything working nicely and you making 1.5 to 2% a day, you can easily double your account very, very quickly. But it's much higher risk. So, you know, and this is why I'm launching this other account over here, is to kind of, I'm trying to get a signal account together, just to show what you can do with higher risk. This is partly why I've put that $750 in there, just to try and, what I'm trying to do is double and double and double on that account up to a very high level. Just to kind of show the compounding effect of this, but as a portfolio. Because everybody wants to put an EA on a chart and just let it make money for them. As you've seen, that exit there was not the EA, that was me. That exit there was not the EA, that was me. Why did I exit there? Because it looked like it was bouncing there. I got out of that. The reason that exited was because that exited there in a profit. If that hadn't have exited in a profit, I wouldn't have taken that short off. The decisions you make are based on the portfolio of how is everything looking on a P&L basis today. Yeah, because my job is literally to do nothing but return a positive here. That's it. So, you know, hopefully that makes sense. Kind of, in long and short, think about, if you know about Tom Hugard, yeah, Trader Tom, he never tells you how much money he's got. I have no idea if he's a multi-millionaire or if he's got a couple $100 grand in the bank, or I've no idea. It doesn't matter. What he does is risk $200 every time it ticks. So if he starts on day one of the year, what's his starting balance? Does it matter if it's 10 grand, 50 grand, 100 grand, or 100 million? Doesn't matter, is it? He's risking an amount of money every time it moves. I'm risking an amount of money every time this moves. Yeah, I'm locking in a maximum loss every day. Whether I've got 1 million in the bank or 10 grand in the bank is irrelevant. I'm showing you what the potential is to make money out of a product. But your risk should be based and your lot size should be based so that you can take a losing run, because you will get a losing run. We've had days where we lose, but we don't lose much because it's so rare for everything just to go wrong at the same time. I've done US dollar CAD, Rudra. You asked me to do that this morning, didn't you? I don't know where it's going. 2.5 drawdown can't be right. You're in about 10% right now. What on the yeah, sorry, that strategy quant is closed trades, not open trades. Yeah, sorry, AZ, I know what you mean. That's not that I'm using that as an example of so this is my, I haven't got I could get this account out, I suppose, but what I'm showing you here is an example of how you can analyze multiple instruments in a portfolio. This is only closed positions. My open floating drawdown is not included in this. Yeah. So what I'm saying is do a back test in the strategy tester, which will show you everything, and then put them together and look at what the maximum drawdown would have been. This is a stop loss strategy, yeah, or a hedge. It doesn't matter if it's a hedge or a stop loss strategy. As long as your hedge strategy like this is being closed out every day at either a positive or a negative, and you are not holding overnight drawdown that you cannot identify, you can back test it, put it in a tester, in an analyzer, and see what the maximum would have been that it would have gone down to. Yeah. So if you're using a stop loss strategy, it can't go down any further than that. Using a hedging strategy and it exits at end of day without an aggressive move, it can't go down more than that. Yeah. Position trading, that is just my closed P&L, not my open. My open P&L is something around about 13 or 14%. So yeah, I'm not. That's what I wasn't talking about. Position trading. I was talking about the stock index hedge. I was just using it as an example. That was confusing. I understand that. But yeah, what's the optimal leverage for position trading? Anything above 200 to 1. Optimal is whatever you can get. 500. When you start going over 300 to 1, it doesn't make any difference. If you've got 300, 500, or 1,000, your margin call is going to be so close to your accounts balance zero, it doesn't matter which you use. Doesn't make any difference. And if you're getting that close to your account balance zero, you've blown your account. So you've over leveraged in the first place. So anything over 200 to 1 leverage is enough to position trade with. And you should be able to draw down sort of 70, 80% into your account with no problem at all. Not that you would ever do that, obviously. If you drew down 70 to 80% into your account, something's gone dramatically wrong, hasn't it? You shouldn't be anywhere near that. If you get to 25% drawdown on your account, there's a problem and you need to address it. Doesn't happen. Unless you over leverage, and then it will happen, obviously, which is why I tell everybody to start with tiny, 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 tiny positions. Because you can go up very easily, but if you've gone up, you can't come down. You know, as I said, as somebody in Telegram's found out, they got into US dollar yen and they've blown their account within a week or so because they over leveraged, not through choice. It was a mistake, which happens. People, this is how we learn stuff. But if you over leverage, you will blow. You've got to look at your tolerances and you've got to look at what you need to earn as well. That's the other important thing. There's no point in having a 10 grand trading account and saying I need to earn 5 grand a month. You're not going to do it. Because every trade you take is going to put you under so much financial pressure and stress, you just won't trade properly. So you've got to be able to breathe, basically, and let the market do its thing. It's going to go up and down, and it's going to screw with you. Yeah, look at this one here. I got out of this. As soon as I got out of that trade, it went down, and I didn't panic. It just went down against me. I had a plan to get out of the trade. It was executed, and it worked. If it hadn't have worked, it would have turned into a bigger loss today than I wanted. But my account can sustain it. And also, don't put all your money in your broker. That's the only other thing I would say. If your broker goes bust, or something goes wrong, or something goes pop, and something blows something, if you've only blown a small portion of your account, you haven't got a problem, have you? I learned that the hard way with Alpari when the Swiss franc peg was removed. All of my trading capital was in Alpari. Swiss franc peg got removed. Alpari went bust. My capital was locked up for 3 months. I couldn't get hold of it. I had to get a credit card and stick my money on my credit card while I was waiting for my capital to come back from the broker. So now I never lodge all my capital with one broker. Yeah. Which is why in here I have this setting. Yeah. Specifically in the Trade Manager dashboard, this is here to simulate an amount of money as an initial starting balance. Regardless of what your actual starting balance is, this reflects what you've got available to risk. If you only put 20k in your brokerage account, you put that as 100k because you're keeping 80k in your bank, which you can top up if you need to. This reflects what your percentage return is on the actual capital you're using to trade. So that's why the toolkit has that. The toolkit, the Trade Manager dashboard has that setting. Because I don't think you should put all your money in your broker. It's dangerous. They can go pop. Look at 8cap. They run a load of prop firms. What happens if the ban hammer comes down on prop firms? 8caps. You want all your money in that broker when that happens? Easy. I haven't got into stock hedge EA, just position trading. But right now, the hedging EA is doing crazy well. It is, but like I said yesterday, this is now, yeah, there will be poor days in here. There will be -4s, -5s, -7s. Yeah. Not often, but they will come. We were talking about this in the group today in Telegram, yeah, because somebody said about yesterday's NASDAQ move, it would have blown your account. There's no way you could blow an account on that move. Yeah, if you went long, I mean, if you didn't get hedged, but if you had have got hedged on this, and you had have taken half of your trade off there, and it had gone twice as far against you as you wanted to, you probably would have, if you were risking the sort of amount of money I'm risking, I would have lost maybe 4 to 5k. There's no way you could blow an account. Look at ADR. And this is why the stock index hedge works on ADR. Yeah. So these ADR moves, right? We look at this dashboard twice a day, every day. And I've looked at this dashboard twice a day, every day in here for years. How many times have you seen that column lit up? How many times have you seen that column lit up? Every now and again, we light this one up. But it's not often, is it? Because price moves within an average daily range. It can only move a certain amount unless there is some catalyst to move it further, because banks and institutions are fighting each other over positioning and they physically can't get it to move much further. Look at US dollar yen today, right? We've just had an intervention move from the yen. What have we done? 175% of our average daily range on an intervention. It's only done 75% more than it normally does on a day. Yeah. For something to get to an account busting level, if you're using 0.5% to 1% risk, it would need to go 5, 6, 700, 1,000 ADR. Something like the US dollar yen intervention that moves ADR against you, 800% of its average daily range against you. It will pull back 300 to 400 of that. So the worst case scenario is if you can survive that, which you will, unless you're leveraged in at silly money, it will pull back enough for you to get out with a loss of maybe 5 or 10% on your account. That's the worst thing that's going to happen. It's just not going to happen. Yeah. I've done back tests on it. Yeah. These back tests here are not using proper risk management. They're not using anything. They're just to demonstrate the possibilities. This is not, this is just settings at random, basically. So ignore the numbers. But there's a $6,000 win. Right, let's find a massive hideous day. There's a $6,000 win. There's a $7,000 loss. Right, $6,000 win, $6,000 win, $7,000 loss. Yeah, look at this 5 ADR. Right, that is specifically manufactured so that 5 ADR is 5R is roughly ADR. We spend 58% of our time within ADR. So normal daily cycles, you're not going to get very extended on things. There are days in here where that figure up there is 20,000 in loss. Just trying to find what 24 grand, right? What did we do on this day? We went beyond ADR 200%, over 200% beyond ADR. Yeah. Massive loss. Yeah. How often do we get to 200% ADR? In my calculations from my back testing over many years, roughly 5 or 10 times a year. And why? Because something happens that is not expected. A war kicks off. Yeah. Someone blows up an oil pipeline. Yeah. The US says we're not going to increase interest rates, then puts 0.5% on it. Yeah. Those days you go, holy crap, and you get out. You don't take that if you've got half a brain. So you've got to be able to use your brain and your head. But the days where we put in those huge losses, which are astronomically big, just don't happen. And they happen because of a catastrophic failure in something in the market. We just don't get it. On a bad day like that, you're going to make something like a 3K loss, risking 1%. That's the norm. And in every strategy you're going to have that is using some kind of hedging or non-stop loss, you are going to have a catastrophic move against you. It's just part of the market. And this is why people pass and fail prop. Because if you have a winning run, you're going to pass. If you have a losing run, you're going to fail. It's not in your control. It's what this market does that controls whether you make or lose money. Just trying to find another one. Again, it's all within 4 or 5 ADR most of the time. This one here, that was a huge day. Look at that. So that's 5R, that's ADR, that's a 200% ADR day. Didn't trade that day. But if it had traded that day, that probably, depending on where you got out, how you got out, how the aggressive move went, there's a million variables in there for aggressiveness and non-aggressiveness that could win or lose. But you go through them all, you don't find them. They're just, they're not there. So when you look at this and you think, right, how much money should I put in my account? Yeah, we're looking at days every now and again where you get a 3K or a 5K loss. But the vast majority of days, if it's a losing day, is not more than 3K. There's another one, 19. Yeah. We are now in August. Yeah, this is 8 months in, right? In 2020, this is all this stuff I'm going through. It's 8 months in. We've had 2 in 8 months where it's gone, holy crap, 200% of ADR. We know that. Look at the ADR, right? How often does it hit 200%? 3% of the time. 3%. There's 365 days in a year, right? They're not all trading days. So that 3% is equivalent to maybe 5 or 10%, 5 or 10 trades a year that will ever hit this level. It doesn't hit this. We've had an intervention today from the yen, and it couldn't get to that. This is a massive move. It's so rare. But days like that, you can't predict. but you know they happen on news, and you know they happen on world-changing events. World-changing events like countries invading each other, we kind of know when it's coming because it builds up. We know at the moment Israel is likely to go into Palestine at some point soon. Yeah. So at the moment, maybe half your risk. Worst case scenario, you get that massive day, you lose half as much money. But that's the risks of trading. If you want to trade safe, go and invest in the stock market. If you want to make some serious money, you've got to take risk. It's not a fun job. I keep saying this. If it was a job I could do, this wouldn't be it. Because it's stressful, it's hard work, and bloody risky. But then again, if you want to make a load of money, you can't work in McDonald's, can you? You become a brain surgeon or a fighter pilot. To be fair, over the past few months, I feel like you've made a lot more on hedging EA than position trading. I have, but it's different income, if you like. So position trading is safe, but small. Yeah, I can make enough money position trading to pay the mortgage very easily. But the hedging strategy, or the opening range breakout strategy, is a high risk, high reward strategy. It's more aggressive. So when that is winning loads, position trading might not be doing well, because when you've got high volatility, position trading tends to get squeezed. Yeah. When position trading is working very well, you get low volatility, which means that breakouts are less rare, less obvious, and happen less in the stock markets. So you'll probably find that the stock index hedge and the opening range breakout won't do quite as well when the position trading is killing it. But they're totally different strategies. So when one's working, the other one's not. When they're both working at the same time, happy days. At the moment, I've done 25% position trading. No, 20% position trading and 30% on this. Yeah, huge month. That ain't going to happen every month. But a lot of that money is going to disappear at some point because I'm going to take some losses. Yeah, some of these positions aren't going to work out in here, and I'm probably going to have to take some losses. These Swiss franc moves are not looking good at the moment. Yeah, we're in an accumulation off of the back of what I was expecting to be a profit take. If this now starts a new leg down, some of that is going over there and taking that away. Yeah, and this is the hard part of trading, is understanding that what you do with this on an intraday basis and what you do with this on a long-term basis is just part of an annual salary. Yeah. Some months I get paid a fortune. Other months I make a loss. But on an average, I will make a really good income. But it's not going to all happen at the same time. And you can't, it's not like a job. You don't get paid a paycheck at the end of the month. What do I earn a month? I don't know. I'll tell you at the end of the year. I haven't got a clue. Some months it's 6 figures. Some years it's always 6 figures. But some years it's high 6 figures. Some years it's low. I don't know what it's going to be. Again, I keep harping back to Trader Tom because it's somebody that does what I do. They put their trades out there and they show you what they're doing, warts and all. You look at Tom's P&L this year, he scaled up to 300 grand profit or something and then dumped half of it. Lost half of his profit this year over a period of a couple of months of a really nasty bad run. Yeah. But is he going to come out profitable on the year? Yes, because he knows that his P&L is going to do that. To get from A to B, you don't go in a straight line. It's a mess, an absolute mess. Yeah. But this is where everybody struggles. And this is what we were talking about this morning in the live room about system hopping. If I want to get from there to there, what I want is a system that delivers that. Doesn't exist. That's the holy grail. That does not exist. Yeah. what you're going to find is you trade a system and it does that, and you go, found it, and then for 3 weeks it goes that, and you go, nah, wasn't it? Hop onto the next one. Found it. No, didn't work. Hop onto the next one. Found it. No, didn't work. What's your P&L doing? Probably more likely doing that. Or that. It's doing that. You're halfway there. But that's what normally happens. But I know my P&L does this because I've been doing it for ages, and I just know now it happens. If I'd have known that that's what a normal P&L looked like, and that there wasn't one that looked like that 10 years ago, I would have skipped 10 years of my education. You don't know that. You don't trust it. But like I said this morning, I can teach you everything I know. You can watch my bootcamp until you're blue in the face. Watch it 10 times if you want to. But until you've experienced what I'm telling you is happening in this market, you won't believe me, because we're human beings and that's what we do. I can tell you right now that you can flip a coin and make money in this market. I've proven it many times. Until you flipped the coin and made money in this market, you won't believe me. Go and do it. Flip a coin right now, and then if it's a head, go and press buy on the NASDAQ, and if it's a tail, go and press sell on the NASDAQ. Wait until that P&L goes green and then close the trade. You will be able to do that because it's going to go up and down. I just don't know when and I don't know how far, but if you flip that coin right now and you press that button, I can guarantee you in the next 24 hours, you'll be able to exit that trade with a profit. Until you've done it, you won't believe me, but do it. Do it with a 0.01. Yeah. Don't go and put 10 grand on a coin flip, but do it. You've got to experience it. You've got to do it yourself. That's the part of the learning curve that nobody on the planet can teach you. We covered this in a lot of detail this morning because it's important. Yeah. We were talking about courses. Go and watch the live. I'm not going to go through it again, but every course teaches you the same thing in a different way. And none of them teach you what the real world is, which is what you need. You need to kick up the arse. I was watching Kunal Desai's video. I was talking about Kunal this morning. He's one of my old mentors, stock trader. And he released a video yesterday, basically a panic video because of what happened in the stock market yesterday. And the fact that it looks like we are entering into another bear leg. Yeah. So all the strategies that all the traders use, which are long only, which I got out of my long only strategies ages ago because we went into a bear market. Doesn't look like we're going back bull, does it? Yeah. So he released a panic video. What do you do in a bear market? Exactly the same as in a bull market. Whichever way they go, you go. That's all you need to know. They're shorting it, you short it. If they long it, you long it. Just go with the flow. That's why the stock index hedge EA works and why the strategy works. Position trading is probably not going to perform as well in this type of marketplace. So diversify, run two. That way, if position trading struggles and comes out with a quarterly flat P&L, hopefully your intraday strategy will work very well. If they both work well, fantastic. So the overall from backtest, which strategy does better by the end of the year? They're different. If you were to risk the same amount of money on the stock index hedge EA as you do on, you can't compare them. I don't think you can compare them, can you? I'm risking a lot more money on intraday because I'm looking for movement, which is tiny. In position trading, I'm happy for it to go 3 to 5 ADR against me over a period of weeks. You can't compare the two P&Ls together because one of them is risking 0.01%. The other one was risking 2%. This one's getting a result within 10 to 15 minutes. This one's getting a result at some point in the next 2 to 3 months. You can't put those two P&Ls strategies next to each other and go, which one earned the most money? They're totally different. They're like chalk and cheese. They're like me and Warren Buffett. Warren Buffett will sit there and trade for an entire year and give you 8% back. I'll sit here and return you 30% in 3 weeks. But I've got a much higher chance of going bust than Warren Buffett has because Warren Buffett is risking 0.001% of his $1 billion fortune per entry. I'm risking $1,000 every go. Whether I've got 10 grand, 15, 20, 25, 100K in my account, I'm still risking 1%, which is 100 times more than he risks on an entry. Position trading is Warren Buffett's strategy. This is scary cocaine chihuahua strategy. Yeah. Slug, snail, chihuahua on cocaine. Yeah. They're totally different things. You can't put them side by side. Which one is more comfortable for you? I'm comfortable with both because I've been doing both for years. This only in the last 3 years. Go back and look at my live rooms, right? From 2 years ago. You won't see me scalping anything. So annoying that you can only see a few at a time. You go back and look at some of the live rooms from just after COVID, 2021 time-ish. You won't see me scalping anything. February 22. So that's only a year and a half ago, yeah? There's no scalping in here at all. All position. I reintroduced scalping back into my... Hey, Neo, look. You still in here? You were here in February 22, look. It's over a year and a half you've been here. God, you must be bored. But look, there's no scalping in this. I introduced scalping because I'd identified, we changed market regime. We went into something very different from a market perspective. And the strategies that I've used and I still use to this day weren't going to be as effective because the volatility was changed. So we had a period roughly 2 years ago where we suddenly went, hang on a minute, it looks like we're going to be financially bankrupt if we don't put interest rates up. And then the markets went, okay, let's try. And from that moment on, what happened was we had loads of squeezes, loads of reduced volatility, but the stock market started to boom. So when the stock markets are booming, where do you want to be trading? Stock markets. So I went back into scalping. I used to scalp, but I didn't like scalp because it's high risk, high stress, high volatility, high whatever you want to call it. It's hard work. Focus. Very difficult. But in these old days, someone's still asking about gold all the way back there. Look, God, this is nostalgic, isn't it? But you've got to adapt. You've got to change. So, you know, if you've got 3 strategies, one of them is a hedging strategy, one of them is a stop loss based strategy working on maybe the hourly time frame, and one of them is a long-term swing trading strategy like position trading. If you've got all 3 of them and they're all got a long-term profitable edge and they're all different enough that they will get very different results, you've got something there that's pretty stable. Again, all 3 of those, if position trading had a plus 2%, scalping had a plus 15%, and hourly strategy, which was a Bollinger Band mean reversion strategy or a trend breakout strategy or whatever, did a minus 7%. That's what you're looking at. Yeah, plus 10. But if you were just trading that, you would go, that's crap, doesn't work. System hop to the next one that returns that. That's not enough to make me money. System hop. There's 2 months of your life gone. Then you find that and you go plus 15. Found it. And then that one does a minus 12%, while this one does a plus 22%, and this one does a plus 2%, or I don't know, 2%. Yeah. And then you go, that doesn't work anymore. System hop. There's 3 months of your life gone. So then you hop back to the one that worked before, that done the 22% month, and then the next month it returns a negative 12. And you're like, why does nothing work? It all works. You're just not spending long enough doing it. Do them all. That way, it doesn't matter, does it? You're diversifying your risk across different markets. You're diversifying your risk across different strategies. Whatever the market is doing, one of those strategies will be able to take advantage of that, and it will make money as long as it's got a positive risk reward ratio. That's why I got into scalping. again because I needed something that was faster. The other reason I got into scalping was because prop was starting to take off, and I was interested in a strategy that I could run on prop. That meant I needed high risk, high risk, fast moving trades. Because if you want to make proper money out of prop, you got to be in and out quickly and make a lot of money fast, haven't you? Just change. Things change. You got to change. So if you're risking more on hedging, does that mean you see position trading as more dangerous? Not necessarily more dangerous, more difficult. But I've got I took some screenshots of my P&Ls over the last few months. Yeah, so this is September last year. This year, which was a negative 8%. The month before that, August, I did 6%. Then John Wick turned up. In July, I did 24%. June, I did negative 9%. Yeah. May, I did 20%. April, I did 3%. This is exactly what I'm talking about, what I've just been through, yeah? I made 3%. If you'd have made 3% that month, you would have gone, this is a load of shit, I'm going to do something else. If you'd have hung around the next month, you would have gone, holy crap, you made 19? You only saw that because your system hopped, yeah? The month before that, I made 16. The month before that, I made 3, yeah? But add all these up, yeah, over the year, that's a bloody healthy return. And that's what you've got to look at. So it's not, I don't think that position trading is as effective now. I just think that it's going to be harder to get those big winning months because at the moment, the market is in such a jittery fear mode with position trading. You're going to find that you're possibly going to start to get some big squeezes in. We've just lived through it, haven't I? I mean, I've just lived through the squeeze of my life. This is the biggest squeeze I've ever had in my career. But I came out with it with something like a minus 13. Yeah. Over 3 months, I lost 13% of my account. Nothing. Made 20% this month. In the grand scheme of things, it's irrelevant, isn't it? I've made a 25 before, I made a 19 before that, I lost an 8, lost a 7, then made a 9, which cancelled one of those losing months out. So that quarter was a write-off, it was a flat line. But the other 2 quarters have been fantastic. What's the last quarter going to be? I don't know. But, you know, there isn't, you can't, I don't know what I'm trying to say, but you can't put your finger on whether something is or isn't going to be good or bad moving forward. Is this scalping strategy better than position trading strategy? I don't know. What's your risk tolerance like? Brian's out of his second NASDAQ short look already. Yeah, it's just come down nicely. Back to where we were. So that was my original TP, which would have just been hit now. This could have gone very differently today. This could be a very different result today, couldn't it? I can still get out of this one potentially with a nice profit. I don't know what's going to happen, but over the next 3 months, I might turn around and go, I'm still going to carry on position trading, but I'm going to reduce my risk right down on position trading because I want to put more capital here. You put your money where it's going to work the best, and at the moment, this is working better. But it may well have months, and I mean, to be honest, in my back testing, and this is why I put so much into this, my back testing hasn't shown that this actually has big losing months, even when it has those big moves, where it gives you those big losses. If you're trading those big losses, don't forget there's always the if you're in them, because you might not even be in those moves. It all depends on the range, doesn't it? Pre-market range. It's all a lottery. It's all a flip of a coin. Yeah. That one big move we looked at, that screenshot of, where it went 200 ADR, that day the EA didn't take a trade because the ranges were all wrong. Yeah. What's the odds? 50-50. You know, it's not 50-50, is it? But it's luck that they didn't take a trade that day. But what if it had been a clean break and it had been a 5R? That would have been not a losing day. That would have been a $7,000 win. And it's all down to whether or not that measurement pre-market or that measurement on that 5-minute candle falls within 2 parameters you've set in a robot that's doing calculations. Random. It's all random. Just got to accept it. Accept what the market gives you. The market pays you when the market wants to pay you. I can't force this now to go down to there to get me out so I can get out of this trade. It will do what it will do. It will either lock that in for me, it will get me out of this position, or it could slam through ADR and go 200 ADR today and make me a $7,000 loss. I have no idea what's going to happen. It's not down to me. It's down to the banks. They pay me. UJ itching for intervention. Is it twitching it again, is it? Is it looking twitchy? No, it's just moving around today. Yeah, it's going somewhere, isn't it? This is my forecast. If it happens, it's my forecast. 145. I reckon you're going to knock $5 off that. I thought position traded was a little more consistent. It is. You mean consistent as in it doesn't have losing months? No, never. I have losing months. I have 2 to 3 losing months a year, every year. It's the amount of loss. So basically and this is exactly what I've just been saying about being paid on a regular basis. I won't earn any money for a quarter of the year. There's a quarter of the year I don't get paid because the market's not right for me to get paid. My strategy has a long-term edge which plays out when the market conditions are right. When the market conditions are wrong, the strategy can't produce alpha, doesn't make money. And that is exactly the same way as every bank, institution, hedge fund, and pension fund in the world works. They produce a return on investment over a period of a year. You don't look at the month by month. It's irrelevant. Hedge funds can draw down 45% into their capital before they get the strategy payout. Yeah, I don't go that far because I don't use the same strategies. And they don't really use them anymore because the S&P isn't performing the same way as it used to. But the edge is not month by month. The edge is long term. And it's exactly the same. You know, people start position trading. They do the boot camp and they go into the boot camp and they're all excited. And then month 1, they lose 8%. And then someone else in Telegram turns around and goes, what a month, I've made 19%. That person that's just started has made a loss. The person that has been doing it for 3 months has made a profit, not for any other reason than they took different trades to that person on different days because they started before them. When they started, they just happened to hit the wrong instruments at the wrong time that went in the wrong direction. But the guy over here, he already had exposure on those, so he didn't take the same trades, therefore he didn't take the drawdown, therefore his P&L was profitable. 2 people, same strategy, executing it to the T as I teach it with the same EA, 20% difference on results. The only reason is one of them started here, one of them started here. This guy had US exposure twice, so he didn't take the US that the guy went into drawdown by 6% on his account on. Flip of a coin. Random. Just repeat the process. It works. When this gets down to there, it goes up. When it gets up to there, it comes down. It always does. Always. It just always does. You have to trust yourself. Go and look on the chart. When it doesn't come down, eventually it does. Yeah. And it might take 3 months to do it. Believe me, I know. What was I waiting for? A 2 ADR push. How long did it take? 3 months. Did I get it? Yes. Because it always does. But if I had not have taken that trade there because I had double US dollar exposure on, I wouldn't have done that, which means I would be 13% more profitable now than I am because I took that one there. If I hadn't have taken that one, I would have taken that one. So the difference would be that instead of that, which means that loss, that loss, that loss, and probably that loss, 4 positions, somewhere in the region of 3, 6, 9, 12, 3.5%, 4%. Difference between getting in there and getting in there and getting out there is 3.5%, 4%. What's the difference between that and that? 4 weeks. The guy that started there and the guy that started there. But overall, they will all have a P&L profitable at the end of the year because the edge is there. The edge works. It's the same edge the banks use. And I don't market this at all, do I? You don't see me coming up all over your Facebook and crap going, I've got the secret sauce the banks use. I'm just doing what the banks do. The banks openly tell you what they do. The funds openly tell you how they trade, what they do. They DCA into positions. That's it. Why has that profit just jumped? Oh, it's because it's just banked. That's why. Sorry, I got exactly the same strategy, the SIH strategy running over here. Totally different results. Why? Because I've got different stop loss and different targets. I've just hit target on the NASDAQ over there. Because my target, I didn't adjust it over there. Remember on this one, I got out here. The original target was here, just been hit. So I'm now looking to hedge out of this position up into that. So we'll see how that goes. But principle's the same. Whether you get out there or there is irrelevant as long as it does that, isn't it? As long as it does that all day, goes up and goes down, doesn't matter when I get out, does it? I'll get out. I just saw my P&L just suddenly go and change. So why is that happening? I'm not out of the S&P either yet. Still in the S&P, short. Yeah, same strategy, same EA, totally different results. Why? Because I pressed a button here and here that I didn't press there. Same strategy. See what I mean? Is it all making sense now? It doesn't matter what you do. It's how you deal with what you get given after you've pressed the button. Everybody's looking for something to help them press the button. Flip a coin. Deal with what happens after you press the button and concentrate on that. That's where the money's made. You don't make money sitting here waiting to press a button. You make money by pressing a button and waiting to see what the market does after you've pressed it. That is what makes you money, not looking for a system or a strategy that does the button pressing. That's the total misconnect that everybody's got. I don't even have that bit in the bootcamp. Should include that, shouldn't I? Obvious, but it's not obvious, is it? No, I mean consultant as in regularly around 10% as opposed to 15% 1 month and 2%. You mean consistent? Yeah. I can see why, because some trades span weeks. Yeah. You can't have consistency. If you're looking for something that gives you a consistent monthly return, you have to trade tiny time frames. And you have to stop trading stock index hedge. But it won't give you a monthly return. Let's say, for example, you've got 8K, 5K, whatever it is, 5K a month outgoings. You've got to make 5K. Month one, you might make 12 and you'll be going, oh my God, love, we've got 6 grand in the bank. Should we book a holiday? Brilliant. Book that holiday. The next month you return 4K plus. You're turning around to the wife going, I can't cover the mortgage this month. We need to cancel that holiday because I need that money to pay the mortgage. Yeah. The next month you make 17K and you're like, screw that. I was right. It does work. And you go and book the holiday again. And then you make a -8 because you had a really bad month and everything hedged and everything went wrong. Cancel the holiday again, love. But look at the total. 12, 4, -17. That leaves you on a -1. 8. You're on +7 for the quarter. It's profitable. How much is it going to make you? Don't know. Depends how much the market goes up and down and what order those candlesticks come in. Can it make you a consistent profit? Yes. Can I tell you what you can earn? No. No one can. You'll make what you make. Keep going back to Tom Hugard, but he made over $1 million last year. He hasn't made anywhere near $250,000 this year. Why? He doesn't know. Because, well, he does know, because this thing doesn't do the same thing twice. You're never going to get the same price pattern twice in a day, let alone in a year, a month, a week, which is why every backtest you ever do is irrelevant, because that is never going to happen again. That price pattern you just saw that happened like that, this here on the chart, let's use this as an example. That candle there to this candle here, go and stick this through an AI generator and ask it to find that exact pattern over the last 10 years. Won't find it. Why? Because it's never happened. Try it. I've done it. I've proved to myself that there is no consistent pattern in this entire thing that is ever repeated. It doesn't happen. Yes, you'll get the same candlestick that will appear like that and like that every now and again, but the one before it will be there instead of there. Won't be the same. And that is rare to get 3 candlesticks in the same thing, which is why everyone concentrates on candlestick patterns, don't they? Hey, look, there's dark cloud cover. Yeah. What size does dark cloud cover need to be? Well, just big. Yeah. How big? Well, I don't know, somewhere around there. It's random. It's all random. Everything's random. It's why it's so much fun. One other question about this. Over the past 4 years, do you tend to do more than 100% by the end of the year? Yes. Because my average is 10 to 15%. Is average is about, again, I always say about 10 to 15. In the bootcamp, I say you should be able to return 10 to, I say I think 5 to 15% in the bootcamp. Average, 120% a year. You're going to have wicked months, 25%. You're going to have terrible months, 2-3%. You're going to have losing months. You're going to have averages around 10 to 15%, roughly 50%, 60% of the time. Over the year, you will double your account. But therein lies the problem. I've got $5,000 to trade with. I need to earn $5,000 a year. So you're telling me in 12 months, I'm only going to double my account? That doesn't pay the mortgage. So what do you need? Capital. Why does everybody think they can buy a Lamborghini? Because that's what they tell you. In the real world, if you've got $5,000, you ain't buying a Lamborghini. You're not even paying a mortgage. You need money, big money. So what do? Go to prop. What do prop do? Put restraints on top of you that mean that you couldn't possibly trade a strategy that returns 100% a year because you need drawdown. What don't they give you? Drawdown. What am I in now? Drawdown. Why have I got a 20% return on my P&L? Because I allowed the market to move up and down without taking a loss on it all the time. What do prop firms force you to do? Take a loss every time the market moves against you by anything more than 1%. This thing moves, the NASDAQ moved down by 2.5%. Yeah? That's just what it does. Why do you think that you shouldn't be able to do that? I can hear silence and light bulbs going all over the planet. Just light. But stick with me, you'll be all right. Do as I do, not as I say. Because I get it wrong all the time. Yeah, everybody does. But I just consistently get it wrong. If you consistently get it wrong, you will also consistently get it right. It's when you consistently get it wrong, then stop and move on to something else and then try and consistently get that next thing right. That's where it all goes wrong. Just do one thing and keep doing it. The market will just pay you. Just does, because it goes up and down. I'm going to leave it there because I've got to go out. I'll be back tomorrow morning, 7:50, same time, and 2:20 for the New York session. We've got basically a CPI for Tokyo tomorrow, or for Japan tomorrow. Doesn't usually move the market. At the moment, though, I don't know what's going to happen because obviously we've got an awful lot of, we just had some Euro news come in. We've got an awful lot of volatility going off at the moment, haven't we, around about the yen. So agreed to debate PEP reinvestment end date this winter, minimum reserves as part of the framework review. Quite sure what that means. Let the market tell you what it means. Not a lot at the moment. So bear in mind you got that coming out overnight. I'm only short of the yen, everything against the yen, so it will or won't do anything. Royal Bank of New Zealand's statement of intent is kind of like their monetary policy, but we've already been given that anyway, so that's kind of a reaffirmation of what they said when they released the rates. So it doesn't tend to do anything. So tomorrow it's PCE, and then we've got Michigan in the afternoon. So busy an hour before the market open and half an hour after. So we should get some decent volatility tomorrow afternoon. And pay attention to the rates, the earnings as well. Come on, where am I? We got lots of earnings coming out after market today. We got Willis Towers, but the Amazon is the main one, Ford and Intel. So those three big aftermarket earners, and then everything tomorrow is pre-market. So by the time we get to the New York Open, we'll have all the earnings information out. So again, another reason to get volatility. Another good reason to start trading stock index opens when we've got all this going on, because this is what makes it fly. It's what gives us the volatility. As traders, we need volatility to make money, don't we? Okay, I'll leave it there. Anything you need, let me know. Be in Telegram. Other than that, back tomorrow morning, 7:50 for Frankfurt, 2:20 for New York as usual. Which calendar is this? This one, Interactive Investor. This is the earnings calendar, so it just tells you for earnings fortnight when all the earnings are coming out. Every quarter, basically. So it's the end, it's the first month of the quarter, usually the middle of the first month of the quarter. You kind of have to, it's January, February, March, April, July, October. Earnings fortnight, basically. So this just, you know what volatility is coming up, yeah? Why did the NASDAQ collapse yesterday? Actually, it was because of Israel. But also, this didn't help. Yeah, so it's all, you're just being aware of what to expect. You don't know what it's going to do. You just be aware of what to expect. That's all. Right, I'll leave it there. Anything you need, let me know. Otherwise, I will see you guys tomorrow. Have a good evening.